Welcome to Performance Optimization Strategy Basic. Myself, Srujit Kakkar. For more information on our products and courses, you can visit www.surjitkakkar.com. Before moving ahead, please make sure you go through the disclosure. I will keep it on the screen for some time. Performance Optimization Strategy Basic Part 6. Let's apply whatever we learned to an example. We will follow 7 steps. Step 1, trade purpose. Step 2, curve analysis. Step 3, trend analysis. Step 4, zones. Step 5, booster scoring. Step 6, SETS, which stands for stop loss, entry, target, and position size. And step 7, placing orders. Let's take an example and apply all these 7 steps. Step 1 is to choose your purpose of trade. Let's say I want to plan a daily income trade. Therefore, the time frames I will be using will be the daily chart for higher time frame, 60-minute chart for intermediate time frame, and 15 minutes chart for lower time frame. Higher time frame for DIT analysis is daily chart. Therefore, for curve analysis, we will go to the daily chart, look up and identify nearest and fresh supply zone, and similarly look down and identify nearest and fresh demand zone. Next, we will divide the area between the proximal lines into 3 equal parts. This completes our curve analysis. From current market price, look up and identify nearest and fresh supply. Similarly, from the current market price, look down and identify nearest and fresh demand. Divide the area between demand and supply zone into 3 equal parts from proximal to proximal. This completes our curve analysis. We have now identified very low of the curve, low of the curve, equilibrium, high of the curve, and very high of the curve. Intermediate time frame for DIT analysis is 60 minutes chart. Therefore, for trend analysis, we will go to the 60 minutes chart to identify trend. Uptrends are made up of higher lows followed by higher highs. Downtrends are made up of lower highs followed by lower lows. Sideways trends are made of relatively equal highs and equal lows. On the intermediate time frame, we will identify 2 recent highs and 2 recent lows. Now we will compare the recent high with the previous high. Similarly, we will compare the recent low with the previous low. We can see the recent high is higher high and the recent low is a lower low. Therefore, we have lower low followed by higher high, which is neither a downtrend nor an uptrend. Therefore, we are in a sideways trend. Lower time frame for DIT analysis is 15 minutes chart. Therefore, for identifying zone for entry, we will go to the 15 minutes time frame. For trades, we always want to use the highest quality zones. Therefore, on the lower time frame, we will look for an explosive move. Here you can see we have an explosive move. To the left of this explosive move, we have a boring candle, which is called as basing. And to the left of the basing candle, we have an exciting candle, which is called as the leg-in. Therefore, we have identified all the 3 components of a zone: leg-in, basing, and leg-out. The leg-in is a drop, basing is called as basing, and leg-out is a rally. We have now identified the structure of drop, base, rally. We will now draw the zone. Proximal line is the highest body in the basing, and the distal line is the lowest low of the pattern. We have now identified a demand zone on the lower time frame. Demand zone that we have identified on the lower time frame is located very low of the curve in a sideways trend. The action grid tells us that we can use this demand zone for long trade. Now we will look at the booster scoring of this zone. The zone is fresh, therefore gets a score of 3. Leg out strength is explosive, therefore gets a score of 2. Time or number of candles in the basing is 1, therefore gets a score of 2. And when the price comes back to the zone, if we have required reward to risk ratio, it will get a score of 3. Therefore, the total score of the zone is 10. Now we will calculate our position size. Let's assume I want to take a risk of 5,000 per trade. Therefore, the position size will be risk per trade divided by risk on the trade. In this case, it will be 5,000 divided by 7.2. Therefore, the position size will be 694 shares. Entry type will be as per the booster scoring. If the score is from 0 to 7, we will not trade the zone. If the score is 8 or 9, we can trade the zone as a type 2 or a type 3 trade. And if the score is 10, we can trade it as a type 1 trade. This is Surjit Kakkar signing off. See you in the next lesson.